The housing market is experiencing both a crash and a boom at the very exact same time, and it all depends on where you live. According to recent data, home prices on the West Coast are plunging, while those on the East Coast, including Florida, are surging. The split between rising fortunes or sinking home values essentially depends on whether the home is located east or west of the Rocky Mountains. From January 2022 to January 2023, home prices fell 7.5% in Seattle and dropped 10.3% in San Francisco. At the same time, home prices surged 12% in Miami and jumped 9.3% in Orlando. Even Buffalo, New York saw home price values rise 8.3% on an annual basis in January. Except for Austin, Texas, 37 of the biggest metro areas east of Colorado saw home prices rise year over year in January. Meanwhile, all 12 of the major housing markets west of Texas saw home prices fall over the same time period. Such a split in the U.S. housing market is unprecedented. When I think back to 2008, home prices dropped in 134 of the 153 metropolitan areas, and the select few pockets of strength saw home prices stay essentially flat, not rise like they are today. Seeing a market with such a stark contrast is something we haven't really seen before. The unprecedented nature of the split or bifurcated housing market is driven by a number of factors that stem from the COVID-19 pandemic, which saw a boom in housing demand at a time when the supply of homes was quite limited. Fast forward to today, and although having moved towards a better balance, supply is still low, while mortgage rates have soared to levels not seen in more than a decade, making it more expensive for prospective home buyers. Sellers in South Florida have one advantage because of a steady supply of cash buyers from the Northeast still entering the market. This influx of buyers is due to the fact that, well, this is Florida, and regardless of market conditions, people, especially those approaching retirement age and looking for second homes, want to live here. It's warm and it's beautiful. And really, the typical migration from the Northeast has always served as a feeder market, regardless of what the market is doing. From a financial perspective, home prices in Florida are favorable compared to values on the West Coast and the metropolitan markets along the East Coast. That's one reason why our market seems more insulated from real estate downturns. Moreover, we don't have the same market conditions or catalysts that caused the 2008 crash, like the subprime mortgage crisis and excessive borrowing that led to the collapse. Our current market is quite different and more stable in that sense. Another factor supporting Florida's housing market is the number of homeowners who refinanced or bought into the market when interest rates were as low as 3%, sometimes even lower. Those homeowners simply are not very motivated to give up the that low of an interest rate. A low interest rate allows them to enjoy lower monthly payments and accumulate more equity in their homes over time, making it less likely for them to want to sell. In areas of the market that were already suffering from sky-high home prices, like in San Francisco and Los Angeles, there has been room for home prices to fall. And a wave of layoffs at high-profile tech companies that are mostly concentrated in the West Coast cities has removed potential buyers from the market and has likely sparked an uptake in homes for sale. To be sure, West Coast home prices had room to fall after experiencing dizzying gains over the past decade. Home prices in San Francisco soared 112% between 2012 and 2020, nearly doubling the national gain of 58% during that very same time period, according to data from S&P Dow Jones indices. The pain seen in West Coast housing prices might take time to spread to the East Coast, if it does at all, given that the supply of homes remains extremely limited. At the same time, the millennial generation and Gen Zs represent a large swath of prospective buyers that could keep future price declines quite limited. That's as long as mortgage rates don't surge even higher. The average 30-year fixed mortgage rate was at 6.42% last week, well below its one-year high of 7.08, according to data from Freddie Mac. That represents some relief for prospective homebuyers. South Florida's real estate market remains strong with a steady supply of cash buyers, favorable home prices compared to other markets, and a lack of the same conditions that led to the 2008 crash. As long as mortgage rates don't rise significantly, Florida's housing market is expected to remain stable and continue to attract buyers who are drawn to its warm weather and beautiful surroundings. If you're looking for your dream home or wanting to sell for top dollar here in beautiful Stuart, Florida, make sure to reach out to us today by clicking the link below.